The last step in learning how to record transactions is to learn how to use a general journal and a general ledger. Here's what the general journal looks like. Let's record some transactions to see how it works. On October 15th, 2014, the owner writes a check on their personal account for $10,000 and deposits it in the business checking account. We analyze the transaction to determine that cash is increased, which is a debit, and owner's equity is increased, which is a credit. The heading of the general journal includes a page reference. Since we are starting a new business, we start with page 1. The top row of each page of the general journal should include the year in the date column. In this case, it is 2014. The next row is the month and date, so October 15th is recorded. In the general journal, you record debits first and then credits. Cash is debited, so you would record cash in the description column. The posting reference column is blank until you post your transaction to the general ledger. Cash is debited for $10,000, so you record $10,000 in the debit column. The second half of the transaction is the credit to owner's capital, so you record owner's capital in the description column on the next row and $10,000 in the credit column. Notice that owner's capital is indented slightly to indicate the account is credited. This completes the transaction. You will see in your textbook that explanations are often added on the next row in parentheses. These are optional, and if you use them, you should keep them as short as possible. For this transaction, owner's investment of cash would be a good explanation. Let's record a few more transactions. On October 20th, 2014, the business buys equipment for $2,000, making a down payment of $1,000 and putting the rest on credit. Be sure to leave a blank row between each transaction. If the year and the month have not changed from the last transaction, you don't need to record them again, so you just record 20 in the date column. In this transaction, equipment is debited for $2,000, cash is credited for $1,000, and accounts payable is credited for $1,000. The explanation reads, purchased equipment for cash and credit. On October 31st, 2014, the business pays off part of the debt on the purchase of the equipment, writing a check for $500. Date of 31 is recorded. Accounts payable is debited for $500 and cash is credited for $500. You stop recording explanations with this transaction. On October 31st, 2014, the business writes a check for $200 for advertising. Date is 31, advertising expense is debited for $200, and cash is credited for $200. On November 20th, 2014, the business provides $2,000 in services to a customer on credit. Since this transaction does not occur in October, you would record November 20th in the date column. Accounts receivable is debited for $2,000 and service revenue is credited for $2,000. Now that we have a few transactions, let's post them to the general ledger. You begin with the first transaction in the general journal that hasn't already been posted. The first entry in that transaction is a debit to cash of $10,000. So you would go to the general ledger for cash. Notice that this ledger already has the account name and number recorded. In the ledger, as in the journal, the first row should contain the year, so you would record 2014 in the date column. In the next row, you would record October 15th as the date. For general transactions, you leave the description column blank. In the post ref column, which is short for posting reference, you would record J1, J for the general journal, and 1 for the page of the general journal this transaction was posted from. Then in the first set of debit and credit columns, you record $10,000 in the debit column. You are simply copying the amount from the journal into the same column, debit or credit, in the ledger. In the balance column, you calculate the balance of the account after the entry you just posted. In this case, cash was 0 before, plus $10,000 debit, so the balance is a $10,000 debit. Now you return to the journal and record a posting reference of 101, representing the account number you posted the entry to in the ledger. This entry is now posted. You continue by posting the second half of the entry. Using the ledger for owner's capital, record 2014, then October 15th, then the posting reference of J1, then the credit of $10,000, and calculate the balance of $10,000. This time it is a credit balance, since 0 plus a credit equals a credit. Return to the journal and record the posting reference of 301. You continue by posting the next entry, a debit to equipment on October 20th. Remember, the first time you post to an account, you start with the year. Record the date, the posting reference of J1, the debit of $2,000, and the balance of $2,000, followed by recording the posting reference of 150 on the journal. Next is the credit to cash of $1,000. Since this isn't the first entry in cash, you use the next row. Do not skip a row in the ledger, and record only the day of the month, 20. Then record the posting reference of J1 and the credit of $1,000. To calculate the balance here, you have a prior balance of a $10,000 debit and a transaction of a $1,000 credit. Remember back to the T accounts? You subtract the smaller from the larger, which is $9,000, and it is recorded in the debit balance column. The third part of the entry is a credit to accounts payable for $1,000, resulting in a $1,000 credit balance, and then back to the journal to record the posting reference of 201, the account number for accounts payable. The remaining transactions would be posted using the same process. Notice that you are keeping a running total of each account as you post, so you have important information such as how much cash do we have right now, or how much do we owe, handy at all times in the general ledger. For this reason, it is important to record the transactions and post them regularly.